Ladies and gentlemen, I'm glad to be here with my pal, great friend, Glenn Schiffman. I met Glenn at Lehman Brothers when he was the head of the media group. It was fascinating to be with him and a brilliant guy, and also a really good guy. And so he and I were in a conversation not long ago where he was talking about his hopes and fears for our country, as he's got kids that he's worried about, just like me. It was a fascinating conversation, but I wanted him to come on because, as you know, we have talked about debt in the past, and it seems amorphous to people. We've been warning and warning and warning about how bad this debt is, and stock market goes to record highs, and everything's just chugging along. And I thought that what Glenn has to say is very compelling. But I want to warn the listeners right now that we are not financial advisors. So what we're saying is just, and what Glenn is going to say is going to give his views, but we don't want you to go out and buy gold or do this or do that. You do what you want to do. We just want to give you some insight. So Glenn, why don't you give us a little around the world of what your professional career has been like and where you are now, which is a really exciting company. So tell us about it.
Sure. Thanks, John. Great to see you as always. And I think our relationship goes back to, I think, 25 years, almost 20,
Oh
20 to
my, are
25
you
years.
kidding me? You're right. I hadn't thought of it that way. Wow,
So
you still look young, but I've gotten old. What can I
no, no, no.
say?
You look great. You look great. Let's see. I graduated Duke University in 1991. I was always enamored with finance. And even when I was a kid, I used to, read the Wall Street Journal, invest what little money I had in the market and try to learn. Anyway, I went into investment banking, had about a 25-year career in investment banking. I was at Lehman Brothers for many years. When Lehman went bankrupt, I was in Asia at the time running Asia investment banking, and I helped sell our business to Nomura. Stayed on at Nomura, a large Japanese bank, for many years. Living in Hong Kong was outstanding, gave me a really interesting perspective on everything outside the US. And it was just a treasure trove of experiences. I was responsible for all of Asia. So from what did I used to say in my speeches? From Taipei to Mumbai, from Seoul to Sydney, I just painted you a 50 million square mile box. And I used to travel and run businesses inside of that. When I left Nomura, I got into advising and investing. So I was at the Raine Group. I was at then Guggenheim, again, investment banking, advisory, and investing on behalf of our limited partners in those funds. And then I became a CFO of a public company, IAC Interactive. We own brands such as the Match Group, Angi Home Services, Angi, Vimeo, the Daily Beast, a lot of other brands. I left there to come to Fanatics, and now I'm CFO of Fanatics. Obviously, this discussion is more in my personal capacity, and my concern and desire for a greater future for all of us here in the world. And I've been at Fanatics now almost 5 years. We're building a global digital sports platform. We're in three businesses: commerce, where we provide licensed sports merchandise. So if you're buying or wearing a T-shirt, a hoodie, a jersey with college marks or pro marks, chances are we sold it to you or we made it. We're in the online sports and iGaming business, and we're in the trading card business. So, uh, uh, been at this thing called business for what, 30, 35 years.
Glenn, so tell our people about the conversation and give them a little bit of a preview. We got together to just have a little drink and maybe have a little dinner, sitting really in a small little Italian restaurant in New York. And Glenn got my attention. He starts yelling at me about what is wrong with Congress? Why can't they? What are they going to do about this debt? And let me tell you what the debt's going to do. So why don't you talk a little bit about what you see and really what your fear is. And by the way, ladies and gentlemen, I had a group of really great friends who were concerned about this on a call with Glenn, and they were fascinated by what he had to say. And I didn't want to let this escape our exciting Substack. So, Glenn, talk a little bit about what your hope and fear and what you're seeing.
Yeah, I mean, look, all this information is out there. A lot of people, a lot of different nodes in the world have written about it, have been concerned about it, but it just is not catching on as a priority for anyone. It's not a priority for the citizens. It's not a priority for businessmen. It's not a priority for our government officials. It's not a priority for the taxpayer. And the problem is very simple. It is we have too much debt, and every year that debt increases by our deficit. So we have well over 30 trillion of debt that our government has borrowed vis-a-vis our economy, our GDP. It's about equal to our GDP. Okay, so this is virtually at an all-time high. The only other time that the debt has been so high vis-a-vis GDP was World War II, when we were financing deficit financing, borrowing money to win that war, and as they said back then, I think make the world safe for democracy. And we then paid down that debt over the next 10, 20, 30 years from, I think, well over 100% to something like 30% of GDP of the economy. That debt now has pierced through 100%. Okay, over $30 trillion. These are mind-numbing numbers. And then every year we're adding about $2 trillion to our deficit. That deficit of $2 trillion, divided by every man, woman, and child in this country, means every year uh, it's $5,000 per person. So every year we're spending $5,000 per person. So if we wanted to balance the budget, every one of us, all 330 or 340 million of us, would have to write a $5,000 check every year over and above the taxes you pay. Okay. Another statistic is the amount of debt, that 30 plus trillion dollars, again, divided by the 330, 340 million Americans. That means every one of us is responsible for $100,000 of that debt. So if we were to be debt free, every single one of us, man, woman, and child, the baby that's just born, okay, owes the government, again, if we wanted to pay off our debt, just to show you the magnitude of the problem, would have to pay $100,000. And that debt continues to grow, and we are not addressing it.
Well, Glenn, so people will say, well, who cares, if we're ringing up the debt, we owe it to ourselves. So, what difference does it make? The government will just print the money, or we owe it to ourselves, so we don't need to care about that.
So
Respond to
I
that a
think
little bit.
the premise is wrong, and the solution and the solution of which you said has the printing of money has real consequences. The premise is wrong that we don't owe it to ourselves. Okay, we owe it to ourselves, and we owe it to others. And even if we owe it to ourselves, the people who who lent the money, they still want their money back. I've never met a lender in all 35 years of business who didn't want their money back. Okay.
And
So
how does that happen? How does the government owe this money back to people? What do people do? Make it in simple terms.
the government will have to tax people,
No, I'm
or the
saying, but
government.
the government, in order to finance it, they need money from
Oh,
citizens. So what are citizens
yes,
doing? Are they buying government bonds? What
correct.
exactly do they do? Put it
The
in
the
terms that people can understand, because it used to be, right? Didn't you think in the old days that parents, grandparents would buy government bonds for like the grandchildren? So
right,
that
and
means they were taking their money and using it to pay the debt.
correct, and that still happens. Okay, every year our deficit, as I said, is in and around $2 trillion. So every year we have to borrow that money just to pay our bills, and then we have to refinance the debt that comes due, because debt always comes due, and we have to keep that. So I don't know exactly what our borrowing is every year is, but it's probably $2 to $3 trillion. So we have to go into the marketplace and convince people and pay people an interest rate to give the U.S. government that money. So I think debt does matter. It does need to get paid back. And what it does is, if the government's out there asking savers for all that money, it crowds out money that could go to the uh, to companies that create jobs and innovate and
Very
drive
good.
the economy. So it crowds out. There's a finite amount of money in the world, and if the government is taking more of it to finance themselves, there is less available to everyone else. That's one. Two, it's the lender has the minute the lender writes a check, the lender has no leverage, has no ability to change behavior. But when you need to go back to that lender and get more money, the lender has leverage. So the lender can ask for higher interest rates, or the lender can say, I don't want to give you any money. Now, higher interest rates increases the cost of financing that debt, which makes the deficit even higher. So it gets even more dangerous. Now, John, your comment on, hey, it doesn't matter, we could always print money. That's true. We can. But more money creates more inflation. Uh, uh, More money creates more instability. It devalues the currency because it cheapens the currency. So anything you want to buy that comes from overseas all of a sudden gets more expensive. So you can continue to refinance the debt, and then when more of your assets, a country's assets, go to pay debt, that's paying for yesterday's growth. That's paying for yesterday's bills. It's not investing in tomorrow. So if you go back and look at a lot of economies whose debt gets up to GDP, growth slows. It's a headwind to growth. Okay. And you see this over the years. It's what's happened in Japan over probably the last 30 years. We've heard about the lost decade in Japan, where Japan doesn't grow. Japan grows between 1 and 2%. It's because their debt is so high. We've had that, during the Euro crisis, 2010, uh, 2010, 2015, when these deficits in Europe just strangled their ability to grow, and Europe grows slower than the US. What does lack of growth do? Again, it impacts your ability, your GDP to grow, to create tax dollars to pay off debt. So you get into a downward
It's a
spiral.
cycle. It's a cycle. Yeah, spiral. So, Glenn, let's talk about this. So, let's say that I needed to borrow money from you, and you said, "Okay, John, yeah, I've known you for 25 years. Yeah, I can lend you money." And I said, "Well, I'll pay you back." And you say, "Okay, I'll lend you $10,000, but it's going to cost you. I've got to put 2% on there. I got to charge for the fact that I'm lending you money." If my debt keeps going higher and higher to you because I keep borrowing from you, at some point you might not want to lend me any more money. Either the rate is going to be so high that I'm not going to do it, or you don't trust that I'm ever going to pay you back, right? Could we
Correct.
get into that situation in the government where all of a sudden people say, I don't want that government debt anymore because I don't believe it'll ever somehow be paid back?
You could. That'll first show up in higher interest rates, where people will demand more and more and more for the debt, which will then therefore crowd out more investment. It'll hurt growth, and it'll make our deficit worse. But at some point, yes, the market could say no, and that's happened in history. That the movie that's playing right now is not the first time the world's ever seen this. Um, and you can literally go back in the dawn of history and look at, the Roman Empire. John, we talked about printing more money, right? And the inflationary effect. Towards the end of the Roman Empire, when they would manufacture coins and they were all backed by metals, they actually mixed less silver in coins. It was a way they devalued the coin. So they tried to inflate themselves out of it. That empire was over. You could go through the Habsburgs Empire in Spain, the Ancien regime, the kings that prior to the French Revolution, dynasties in China, the British Empire post World War II. It just got to the point where the debt was just suffocating. These empires, they couldn't invest in innovation. They couldn't invest in self perpetuation. They couldn't invest in the people. Eventually, they got overthrown. Eventually, they just receded from
Well, it was a
power.
loss of jobs, but also for people that were holding, like in America today, if we get to the point where people don't want to lend anymore to the government, if we were to go towards inflation, what happens to Americans work a long time in order to get to a point where they can retire. What happens to what they earned for retirement? Or what happens to kids that are trying to come out of school and get jobs? What's the situation there?
Look, it's a massive headwind. Inflation is a regressive tax on the poor. People who have excess capital can invest that excess capital and can potentially enjoy the benefits of inflation because again, interest rates will be higher, pricing power is higher, so you can own assets that may be able to appreciate. But it's a regressive tax on the poor. Let's say you have $100,000
But when
of
you're
fixed.
talking about assets, Glenn, you're talking about like you can have a big home or you're
Correct.
investing in gold or silver. You're not investing in the American dollar, right? I mean,
Right.
you're what you are holding in dollars, all of a sudden it's not worth very much.
Yeah.
So you
So
could
if you
spend a lifetime working and then one day, basically see that you could be wiped out.
correct. So if you have $100,000 of fixed income of an income stream, a pension or investment when you retire, and inflation goes up 5% year over year, that means that $100,000 has $95,000 of buying power. If it then goes up by 10%, that 95 has $85,000 of buying power, et cetera, et cetera. So when you're on a fixed income, or you have finite resources, inflation is a regressive tax on the poor.
Now, what about foreign governments buy our debt too, right? Or foreign investors? Tell me,
Correct.
since you ran Asia there for one of the big operations, how do they look at this? And what do you think the future is in terms of how they look at us?
Yeah, look, it degrades our ability to be a leader, and it degrades our influence on a global basis. When you have uh, excess capital. You can invest that excess capital. You can build up a military. You can provide aid. Um, you can influence people with the power of the purse. But ironically, when you don't have a surplus, you're not making money, and you have to go to those people and ask for money, it just degrades your ability to allocate your resources the way you want to allocate your resources. So, despite our military power, despite our standing in the world, despite our ideals, we all of that gets compromised if then we have to ask for permission. It's like a child asking their parents for allowance. And you know what? It's something called the power of the purse, the golden rule. He with the gold makes the rules. And if we have to go to a foreign government to get money to fund our way of life, they may have a point of view on our way of life in a manner that we don't like. Not unlike when all of us were living in our parents' home, we wanted to get out of our parents' home because we wanted to start making the decisions. But if we're relying on them for money, they can make the decisions.
Well, Glenn, is it at some point that these foreign governments, do they start wondering about the level of debt we have? And they say, well, I'm not going to buy any more
I think
US debt. Can that happen?
it can. It can. Um, and it may. Now, we are very lucky in America for 1,000 reasons. One is our dollar is the reserve currency of the world. So a significant portion of commerce happens in the US dollar. So that means governments need to own the dollar to transact commerce. So that gives the dollar strength, and that gives demand for our debt and the paper that the obligations that we sell. That may not go on forever. Obviously, a lot of governments are trying to diversify away from the dollar. So yes, uh, there's a world in which the governments may eventually not want the dollar.
So, Glenn, we could either have inflation or high interest rates, which then leads to a slowing down of business, lack of jobs. Why does a family living in Peoria care about this? Why should they care?
Yeah, because there's only a couple ways out of this. It's massive increase in taxation to balance the budget, which will impact that family. It's inflation that will impact that family. So everything they buy will go up in price, and if their income doesn't go up correspondingly, then you have less savings. And the concept of our standing in the world, of course, may not impact their day to day, but that will impact generationally their family and the future of this country if our uh, leverage around the world and our ability to project the American way, project the ideals that we all stand for.
But Glenn, you know what? A lot of people say, we've carried the world for all this time. They need to carry themselves, and why do we care about all this stuff? Yeah, and now we see tariffs being put on, and we're just going to take care of ourselves. Why is that bad?
Uh, that could be okay if that's the way our economy and the world operated, but we import oil and gas from other countries. We import cars from other countries. We import food from other countries. And as we've talked about, we import capital from other countries to pay our bills. So if we didn't need a thing from overseas, cars, oil, natural gas, uh, uh, rare earth minerals, to use a topic, if we didn't need all that, if everything was within our four borders, um, then and if we were truly self-sufficient, we would be fine. But we're not self-sufficient. It's like a family. If you have a farm that gives you everything you need to eat, you never need to go to the supermarket. But unfortunately, the US, this is a we've the world has gotten more and more and more global over more and more and more global over the last hundreds of years, and we're a participant in that.
Well, should we change that? Would that be better if we just told everybody to go take a hike, or would things grind down?
As we're structured today, things would grind down. Could we transition that over the next 100 years? We could, but understand we would be sacrificing uh, significant efficiency, significant productivity, and significant growth. As the economy has evolved over the last 100 years, nothing has lifted people out of poverty more than the free market system. Nothing has elevated the net worth of individuals and the income of individuals than the free market system. And by buying goods and sourcing goods at the most efficient part of the economy and of the frontier, uh, that enables resource to be allocated more efficiently, uh, and has enabled this country to grow, the per capita income to grow dramatically. So it would take a long time, and it would be a very difficult adjustment.
Well, when I look at it, isn't the world order sort of like a baseball team? You have a first baseman, they're not as mobile. You got the shortstop, can do lots of things, but can't hit home runs. You got somebody in center field that can hit home runs. I mean, there's parts of the world where they make things a lot better than we do. And if
Correct.
all of a sudden we say, well, we don't like that anymore, we're going to make it. Well, we can't make everything as well as people in other parts of the world. Just like a baseball team, every player's not equal. And so I think that you'll have a grinding down of the economy. I don't even know how you could do that. I don't even know, Glenn, if it's possible for us to just do everything internally. I don't even know how we would go about it.
Look, and now again, analogize it to the family. Are you going to build your own car? Are you going to grow your own food? Are you going to mine your own oil in your backyard? It's going to be hard to mine to dig your own oil in the backyard when you don't have any oil. Like the Middle East has a lot of oil, has a lot more oil. The Middle East has a lot of liquefied natural gas, more than we do in the country. Um, so that would be a slow, painful transition that we're not equipped to do right now.
All right, so let's say that the debt keeps rising, keeps going higher and higher and higher. We keep have to raise, we used to pay people more in interest to lend the government the money to finance our debt so we can run the government and run the country. So inflation starts to get out of control. People don't want to buy our debt anymore. Um, the economy shrinks and people are out of work and all that. When's that going to happen? Because people like, oh yeah, okay, I got all that, but that's over the rainbow. That could happen. Why should I worry about it? When when
Yeah,
when do you think? And when would we see the signs of this? When would we begin to say, oh, this maybe is happening?
I have no idea as to the timing, and no one does. Um, and no one does. But look, we could be seeing some of the timing now. Um, the increase in the price of gold to all-time highs, the increase in the price of silver to all-time highs, the increase in cryptocurrency, which you could argue is the younger generation's gold as a store of value. That
And why
that
is that
may,
happening, Glenn? Why do people want to go into those things? Why is it?
Because that is regarded as a store of value that isn't dependent on a government's decision to print money, to run a deficit. Gold is gold. We're not making any more gold. You know, you could mine some here and there, but by and large, the amount of gold on this earth is the same. Uh, that it's ever been. Again, some will be mined more and more, but it's a fixed
Right.
amount. So it's a
So I can
store of
believe in
value.
that. I can believe that it's not going to be
You
devalued
can.
like my
You,
like my cash might be.
correct. And if your cash is devalued and gold has a certain value, you can exchange it back for more amount of cash. So I don't know when, John, all this comes to fold, but I think you're seeing it in how pesky inflation is. Inflation's been a while. I think you're seeing it as our influence on the global stage is getting a little bit more challenged. There's something called the Ferguson limit, because again, none of this is new. um we all arrogantly think everything we do is new and special, but but these things happen. The Ferguson limit is an economic doctrine that when the interest expense in your debt exceeds what you spend on the military, that's when empires begin to lose their standing in the world. And he did great research, and you could chat GBT it or you could Google it. That literally the peak power of a government or a dynasty um, was directly related to that moment when you spend more on interest, the past, than you did on the military defending the future. We're at that point now.
I think we're
Um,
we're beyond that point. I think we spend more on interest than we do on the national security.
I think it's about $1 trillion each. I think they're about the same,
Okay.
about trillion each. But yeah, I think this year we pierced through. I think you're right. But for argument's sake,
For
we're
government work. Yeah, for
for government
government
work,
work. Yeah.
a malapropism.
Right.
We're about piercing that through. So I don't know when, but it's getting more and more serious. It's getting more and
Are
more
you doing
challenging.
anything about this to protect yourself to have more assets out of the
Yeah, yeah, I'm investing more in hard assets. then fixed income. I think fixed income, which is bonds and such. I when you loan someone something, when I loan the government, or buy a treasury, which is effectively me loaning the government, I only get back the same amount of capital they gave me. Okay, so I'm investing more in hard assets, in real estate. Yes, I do own gold. I've been ta- toying around with cryptocurrency just to try and get smart on it. But yeah, I think I'm oriented a little more towards hard assets. Again, like the market is no one's smarter than the market. Uh, I try to be well diversified, so I would counsel diversification. But equally, I would counsel do not take investment advice from me.
Yeah, I agree with that. I understand. Glenn, when things do go bad, when you end up in a recession, man, it's ugly. People really pay the price. And you're right, the people in the middle and the lower income pay a really big price. And we've seen some of this happen for a variety of reasons. The bankruptcies, the shutdowns, these kinds of things, COVID for that matter. Um, this could be a little bit more permanent, couldn't it? I mean, those things kind of come and go. What I worry about is once it hits, what you're going to have to do to apply the medicine is going to be really tough, isn't it?
Yeah. When there's been economic issues in the past, um, what governments have by and large done is fiscal stimulus, so put more money in the economy, and financial stimulus, lowered interest rates and or effectively print money. What in the great financial crisis, and then most recently with COVID, the Fed did on something called quantitative easing, where they just put more money. Now, if the problem is that we have too much deficit and we don't have the ability to create capital because we have to pay down our debt and we have to allocate so much of our capital towards the past and towards interest. Those two instruments that governments have used for hundreds of years to solve problems are neutered. The government can't have fiscal stimulus, so can't put more money in the economy because they can't borrow it. And uh, the the financial stimulus, the monetary stimulus can still be there, but it'll be muted in its effectiveness because of the inflation that will have preceded this and it will cause. So yeah, we could be in for some severe belt tightening, which again, the consequences are never shared
Glenn,
fairly.
what I worry about is I've worked hard all of my life to accumulate some wealth that I can ultimately share with my family and charities that I want to do. My concern is if all that becomes devalued, in other words, raging inflation, lack of trust in the dollar, then all that work I will have done all of my lifetime uh, will not have paid off. I will be just a fraction of what I've been able to earn because the government, politicians were irresponsible in terms of managing the way our government works. That's my concern. And we could talk about gold and assets and homes and all these other things, but Glenn, I think I don't think that's the answer. I think the answer is that we get responsible. And one thing people do understand, when you keep going in debt, when you get your American Express and every month it puts more interest on and you keep ringing up the bill, at some point it doesn't work. They take your card away.
They do.
And I think when you look at the government, at some point, the government's, I mean, people are just going to have their cards taken away. We're not going to be able to do this anymore. And we worry
Yeah.
about the funding for schools and for National Institutes of Health and all those things. The more that we ring up, the less money there is to help us find cures to these diseases or to protect ourselves, with the military or to take care of the quality of life through, parks or whatever it is we like and education for that matter. That's what I worry
Look,
about.
I think you're right. And to simplify it for your viewers and listeners, always take this down to the micro level, to your household. If you have debt, a mortgage, every month you have to make the mortgage payment. If the mortgage payment goes up, you have less money to spend on, pick your
There
poison.
you go.
You have
Yeah.
less money to spend on education. You have less money to spend on charity. You have less money to spend out to dinner. Now, also, when you go out to dinner, let's assume you have a budget of whatever you have a month, $1,000 a month, $10,000 a month, and you go out to dinner. And the last time, John, you went out to dinner, I'm sure you looked at the prices and you said, What is this? Like, when did a piece of fish be $40, be $30, be $20? I don't want to be the old guy, but I remember when it was cheaper. But like, if you have a monthly budget and like the price of that piece of fish or dinner goes up, then you can't spend the money elsewhere. It's that simple. Or you go to the gas station.
Yeah, I think you've hit on it here. This is the nub of it. And this has been the challenge in talking about this issue because it doesn't ever seem to go home. People don't see it as something that affects them, but it's real, is the
It's
point.
real.
The point is, this is not a made up fantasy. And so the key is not to fix it all at once. The key is to have some backbone and begin to fix it. But Glenn, it's
That's right.
hard to fix it when every time you try to fix it, some interest group says, don't fix mine, fix somebody else's. And
Yeah.
that is the problem. And without courage, without the willingness to do your job and take the heat, you know, but isn't that true across everything? I mean, we know that there are addictions caused by, to kids because of social media. Why doesn't somebody do about it? I mean, why don't the companies do something about it? Why there are so many things we can point to where people are just not doing what they know they ought to do.
Right.
And we just want to blame politicians, but I think we have to look at all of society and
Yeah.
say, where is the character in any of these things? I mean, we got a coach that just got fired at a football team. He's getting paid $50 million. I mean, where's our values, right? I mean, God bless him. He took a team that was collapsing and was almost out of existence, but $50 million, and we're paying our college students now. It's like, who can raise the most amount of money and pay our? We got kids making what, $5-6 million a year who are
Yeah.
freshmen and sophomores in college. So what I'm saying is, it's not just the politicians; it's everybody
Right.
who is kind of an abdication of character and responsibility, and we need to get it back, and we can, and we will.
Look, it's the difference today versus tomorrow, right? We all are way too focused on today, and no one thinks about tomorrow. No one invests like we should for tomorrow. And again, it's not just the U.S. and it's not just now. I gave you these examples of going back to the Roman Empire. It's human nature that we have to try to mold, arrest, motivate, and have people think beyond today
Yeah,
and
it's
invest in
character,
tomorrow.
Glenn. Character in so many things, and it's hard because you are focused on today and what I'm going to get tomorrow. And I was talking to somebody the other day who's trying to climb up to a more important position than the important position they have, and I said, look, just relax. You can't figure out the future. And if all you're doing is worried about, I'm going to get this, I'm going to get that, it's a life that it steals your joy. It's not right. And so having character really does matter. While I have you, because we can chop this thing up a little bit to make sure that that we are hitting the target here. You mentioned ChatGTP, so that brings up the issue of AI. And there are some people saying that we may have an AI bubble. Everybody investing in these different parts of AI. Something's going to work and something's not. The bubble comes about right when those who invested did not pick the right horse, and they worry about this AI. Talk two things about the AI bubble that's potentially, and secondly, talk about AI and what we do, because you're in a business. It's a perfect business where you could probably deploy AI and substitute it for hiring people. What does that mean? Where do those people go? What do you see about all this?
All right, let's first start with the bubble.
At least it was an easy question,
Yeah,
Glenn.
we could go on forever. Look, let's start with a bubble.
Yeah,
I have no idea if we're in an AI bubble. What I do know is innovation happens all the time. And every time there's innovation, capital is needed. And where capital is needed, capital goes. Okay. But capital stays where capital is rewarded. And I guarantee you, every one of these AI companies will not reward their capital holders. And you you can go back to the when we built railroads. How many railroad companies were there in the United States in the 1850s? Hundreds. How many are there today? I think less than a dozen. How many automotive companies have been created over, starting with, in the early 1900s? Hundreds. How many are left today? Dozens. In the year 2000, when you and I started working together during the internet bubble, how many internet companies were created? Hundreds of thousands, if not millions. How many are left? A fraction of those. Okay, so as innovation comes, uh, capital floods it. Capital likely overfloods it, but capital only stays to where these companies, to companies who reward that capital.
that's
So
really good,
capital,
Glenn. Very good. Keep going.
so
Really
I
good.
think so. AI is definitely a thing. AI is going to be very important to this world, and some of these AI companies are going to be America's and the world's next Amazon and next Google, and next Ford and GM, and the great companies that we've watched prosper over the last hundreds of years. But no, not all of them are going to survive. And yes, there are bubble type conditions. But again, I don't know if there's a bubble or not. You
Right.
only know, but no one knows, and you only know in reverse. So that's the bubble, and it makes good headlines, and people like headlines, and people like their names in headlines. So you get those prognostications all the time. Um, but yes, there are some extreme conditions. How shall I say? The amount of capital that's going into AI is staggering. Just staggering. In terms of AI, look, what I tell my people is I don't think you're going to lose your job to AI as of now. I think you're going to lose your job to someone who uses AI. So I counsel my team members, I counsel my partners, my employees, just experiment, play around with it, download ChatGPT, just ask it questions and see how it solves problems, um, and then figure out how you can apply it to one thing and then another, and start putting one dumb foot in front of the other, and just learn. Because I think the AI is for real. It's going to be part of our future, and you want to be part of that future, so use it, harness it, um, and have it be your executive assistant. As I jokingly say, a Google search and AI, it removes all doubt. It removes all doubt. And anything that you and I used to joke about, hey, who won the World Series, 30 years ago, like, it removes all doubt.
No, I have a new golf instructor. It's called Chat GTP, and I find it's pretty good. I can get rid of all these other instructors. All I do is
Right.
look at that. No, it's really pretty amazing. So, Glenn, I appreciate you taking the time, and it was a lot of fun. And I guess I'll be seeing you in New York sometime very soon.
I hope so, John. Great seeing you.
Yes.
Thank you for doing this. Thank you for inviting me, and best of luck and good luck, everyone.